Hey everyone, and Happy New Year. I hope you had an awesome holiday season. I know how these days between Christmas and New Year's can start to blur together. Half the time it's hard to even know what day it is. But are you ready for your New Year's goals? You're maybe planning to get in shape, buy or sell a home, invest in a rental property. I can't help you with the fitness goals, but if your real estate is on your list, I've got you covered there. Now with the new year here, it's really important to understand what's happening in the market because trust me, things aren't the same as they were even 6 months ago. So if you're basing your plans on how your buddy's sale went in 2024, that may not be the best advice going into 2025. This year is shaping up to bring some interesting changes. Now are prices gonna keep climbing or are they gonna start seeing signs of a slowdown? Let's jump in and see what the December numbers are telling us for that. Now for those of you new here, I'm Joe Skipper, owner of Skipper Realty Group, brokered by eXp Realty here in Oregon. And today we're gonna break down the latest data to give you a clear picture of what's happening in the Oregon housing market. So whether you're looking to buy, looking to sell, or you just wanna stay informed, make sure you hit that subscribe button so that you never miss an update. All right, let's take a look at the numbers for this month. Starting with the median sold price. In November, the median sold price for homes in Wilsonville came in at $727,500. That's a 1.8% uptick from October, but down just 0.6% compared to this time last year. But honestly, that year-over-year change is so small, it's really nothing to stress about. Now, rising mortgage rates and the typical winter slowdown have cooled off buyer activity a bit. As we move into these colder months, it's more important than ever to price your home competitively and strategically to attract motivated buyers and get the best outcome for you. So let's talk about days on market. We've seen a big drop compared to last year. In November, homes were on the market for an average of 38 days. That's way down from 58 days last November and even lower than 51-day average we saw last month. Homes are definitely selling faster, but the pace still feels healthy and balanced. Buyers and sellers have time to make thoughtful decisions without the crazy rush that we saw in recent years. For sellers, this means pricing your home right is still the key to getting offers quickly. Now, inventory. This one really stands out to me. In November, the number of single-family homes on the market dropped to just 11. That's a massive 62% decrease from October and a 54% drop compared to last November. Now, while it's pretty normal to see inventory dip during the winter, this year's drop is especially steep. For sellers, this could be great news though. Lower inventory often means less competition, so listing sooner than later could work in your favor. And having an experienced agent who can use market data to guide your strategy is gonna make all the difference in getting the most out of your sale. But what does all this mean as we kick off the new year? Well, the market is likely to see more changes in 2025, especially with the upcoming election and everything that comes with it. Is it a good time to buy or sell? That's going to depend on a lot of factors like your location, how much equity you have, and whether you need to move. Having the right expert in your corner is going to be the most important thing ever in this new market in 2025. Let's be honest, a few years ago, almost anyone could get you into a home. But now, the market's different. Agents who aren't prepared are dropping out left and right because buyers and sellers like you are expecting more. And that is a good thing. But it also means you need to work with someone who knows what they're doing the first time so that you can avoid costly mistakes. If you're a buyer, this could be a great time to find a home with less competition. And if you're thinking about selling, pricing your home strategically is going to be key to catching the attention of serious buyers going into 2025. Now, as always, I brought in my trusted lender friend, Paul Robinson, to share the latest on mortgage rates and lending strategies. Now, with interest rates still being a big topic, Paul's got some great insights in these videos to help you make smart moves in the market. And in this video, he's covering something really interesting, bank statement loans. So if you're self-employed or have unique income trends, Paul's gonna break down a loan option that may work for you. So take it away, Paul.
Hey, thanks, Joe. This is Paul Robinson, owner of Greater Oregon Mortgage Company. My NMLS number is 235238. I wanted to talk about bank statement loans for self-employed borrowers. These loans are considered non-qualified mortgage products. Difference is qualified mortgage loans are FHA, VA, USDA, Fannie and Freddie products. But when someone doesn't fit into the guidelines for those, and oftentimes it has to do with how much income they are able to get off of their taxes. So in a case of a business owner that had a down year or intentionally had a down year, in some cases, for example, I've had clients where they have had a capital gain and a significant capital gain because they sold either a large property or maybe multiple pieces of equipment that they had to take the capital gain on. In that case, their CPA offset that gain with additional losses that they were able to take on their business. And of course, the intent is when you're self-employed, you want to pay as few taxes as you can. But on a year like that, you can remove your ability to use Fannie Mae, Freddie Mac, or any of the government programs. Well, in a lot of cases, the businesses are still strong. They're doing fantastic. It was just a smart financial decision to do that. So what we look at is, okay, what's your cash flow? What are your receipts every month? And if a business has strong deposits, then oftentimes a bank statement loan makes a lot of sense because the interest rates aren't that much more, and you can just use your bank statements instead of giving tax returns and getting letters from your CPA. Maybe you're self-employed and you also pay yourself a W-2, so you don't have to worry about the W-2s or the pay stubs or putting a profit and loss together. Basically, you get 12 months of your most recent bank statements that are for the business, and then we bring those over to the investor. They do their calculations. They take the deposits you have and they put a factor on it. They look through and see what things they can't use. For example, anything that's not revenue oriented, any deposits that are just transfers. No, can't use things like that. Has to be legitimate revenues coming in for either services or products that were sold. But in a lot of cases, I've seen these loans really save deals, not only on helping someone purchase a property that they would have had to wait, or doing refinances where it's like, man, this makes a lot of sense to do a refinance right now, and it allowed them to do that. I just wanted to bring these up because they are a really good alternative. They actually, and they're not crazy expensive either. Their fees are very similar. You don't have exorbitant fees. The interest rates are a little higher, but to give you an example, right now I have a client that's purchasing a property and they're at 8.25 on a 30-year fixed. And the conventional loan at best right now for similar pricing was about 6.99. So it's not crazy more expensive, and it's something that makes a lot of sense if you can avoid paying taxes, more taxes, or in some cases, people do just have down years. They have some unexpected expenses that came up, and it really just rocked their bottom line. But at the same time, the business is still healthy. The business is still just progressing along. It still has great deposits, great revenues. It's just one of those things, you run a business, sometimes you have a down year. So anyway, that's something I just want to put out there that's an excellent alternative. They do not have prepayment penalties. So as soon as the next year comes around, and if the taxes are good where we can move you back over to conventional loan products or government loan products, you can get out of it. So it doesn't necessarily have to be a long-term fix, but rather it can be a great temporary loan until you're able to get back over to the conventional side, or again, the government side of things, the qualified mortgage side of things. Hope that's helpful. Any questions, please feel free to reach out to me at paul@gomcloans.com.
Thanks, Paul. So whether you're buying or selling, staying informed is half of the battle for you. If you want more details or personalized insights for your area, please feel free to reach out or drop a comment below. Don't forget to like and subscribe so that you're always up to date on the Oregon real estate market. Thanks for tuning in, and let's make this new year a productive one for your real estate goals. See ya.